Good afternoon, and thank you for joining us. In today's webinar, we will be discussing the CSRD and what it means for corporates. For those of you who don't know, on the 21st of April, the European Commission published a proposal for a Corporate Sustainability Reporting Directive, CSRD, to revise and strengthen the rules introduced by the Non-Financial Reporting Directive. Joining me today is Fiona Quinlan, our Senior Manager at TCFD Technical Capacity Building Expert. Alongside her, we have Axelle Blanchard, our policy expert at CDSB based in Brussels, and Yen-pei Chen, an expert in corporate reporting and tax subject matter at the ACCA. Before we jump off, I'll give you a quick run through of our agenda. Fiona will be presenting some of CDSB's findings on the NFRD, particularly in relation to biodiversity and land use, water and climate. This research formed the basis of some of the thoughts around why the CSRD was needed. From Axelle, we'll be getting an update on EU policy and the current CSRD draft. And Yen-pei Chen will talk to us about the accountancy profession's view on the CSRD and what is needed to make this reform a success. So without further ado, I'll pass on to Fiona.
Sure, thanks Patrick, and hello to everyone joining us. Great to be with you today. So as Patrick mentioned, I'll be starting by giving a brief overview on CDSB's research that we've conducted for the past few years around the Non-Financial Reporting Directive. Can I just confirm if people can see the slides? I think we may have lost those temporarily. Great, thank you. So if we just move on to the next, please. Great, thank you. So as Patrick mentioned, this is research that we've conducted for the past 3 years now, really looking to assess how well the current reporting under the previous EU Non-Financial Reporting Directive is working. And we've also, as part of that assessment, looked at disclosure under the Task Force on Climate-related Financial Disclosure Recommendations as well. So really our reasons for doing this is to firstly provide evidence to policymakers on how well the legislation in its current form is working, and as Patrick mentioned, as an informant to the revisions of the directive that are now ongoing and we're discussing today, but also really to provide that feedback to companies as well directly to help them at a practical level in improving their disclosures. So some of the key findings that we saw overall across our latest review, which we released at the back end of last year, were that disclosures really had improved somewhat since the previous year in terms of the overall number of companies reporting key information. But actually really in a qualitative sense, the overall performance of companies hadn't necessarily moved on as much as we'd like to see. And so some of those key weaknesses that we'd seen in previous reporting years were still valid. So still TCFD adoption was quite limited. Still information from a risk perspective wasn't always present. And also the kind of materiality of reporting was not always made clear. And if we look at the different sort of environmental topics that companies may report on, which we'll explore in further detail, we saw quite a big disparity. Sorry, previous slide, please. We saw quite a big disparity between the different environmental topics. So you'll see there that although water and climate are very commonly disclosed by companies within their annual reports, often information on biodiversity or deforestation related issues was much less apparent. So really overall, the picture was that the reporting in Europe under the Non-Financial Reporting Directive was still not quite as complete and coherent as it needed to be, and didn't necessarily apply clear materiality principles to enable investors to understand what were really the most pertinent issues for companies. Next. So moving on from this, we then have done some deep dive work looking at the different thematic topics that are presented on the screen, really to understand how, as I've mentioned, these different topics are being reported and the kind of differences and trends we see there. So we've covered climate and TCFD, water reporting, and then kind of biodiversity, deforestation, and forest degradation. So I'll now go through just a little bit of detail on each of those topics in turn. So as I've said, climate was actually the most strongly reported issue across disclosures, but I think it's still fair to say that there were challenges that we saw there in the quality of reporting. So we saw that all companies are now reporting their scope 1 and 2 greenhouse gas emissions. That's relating to their direct operations and their electricity use. However, a quarter are not actually disclosing on their scope 3, which is their value chain impacts. And for many European businesses, that would be quite a large share of their overall carbon footprint. However, we did see some positive signs in that 86% of companies have now set and disclosed a quantitative carbon emissions reduction target. However, not so strong was some of the TCFD framing, as I've mentioned. So whilst we saw that over 2/3 are now referencing TCFD in their reports, there's a big disparity between that reference versus full implementation of the recommendations. So for example, regarding disclosure of risks over the long, medium and short term, only 4% of companies are actually able to provide kind of clear and full disclosure there. So if we turn now to water reporting, this was the second most reported on topic after climate. As you'll see there, it's something that 94% provided reporting on, and 90% disclosed KPIs on. So that was, in some senses, quite positive. But what was really missing for water was the focus on kind of the business risk angle. So organizations may report water consumption, but often they're not necessarily considering the environmental degradation related to water, or indeed how their business might be constrained by water availability in future. So that's something I think we saw as an area for improvement in water reporting, and really ensuring that it's integrated within strategy in the same way that climate is. And then turning finally to the topic of biodiversity and deforestation. So as I've mentioned already, this was the least commonly reported topic that we saw within reports. And particularly when we consider quantitative information, this was often absent. So you see in the graph on the right-hand side there, we looked at the different types of KPIs that European companies were using. And it was far less common for quantitative metrics to be used for these topics in particular. So I think really what that indicated is that although companies are increasingly recognizing that these issues are also important, they haven't necessarily moved beyond quite high level narrative reporting as yet, and really followed through with the specificity that investors would need to see. And particularly when we look at risk disclosure, only 16% are thinking about business risks that connect to biodiversity, despite, I think, the increasing recognition we have as a society that actually, many business functions are heavily dependent on biodiversity aspects. So that's clearly an important gap. So if we turn to the final slide, which shows a summary then. So really, as I've said, although climate change is one of the more strongly reported topics under European reporting at present, we're still seeing challenges there in that it's incomplete and it's not aligned to the TCFD recommendations. And then when we turn to broader environmental topics, actually what we're seeing is that reporting is often still very much narrative in nature and doesn't have the same kind of quantification and financial connection that climate reporting is starting to see. So really what we need to see is a move beyond generic kind of reporting on environmental topics to really giving that specific detail that will enable investors to understand risk. So that obviously is something we're here to discuss today in terms of how the CSRD might support that. So that's a summary from me, and I'll hand back over to Patrick. Thank you.
Thanks, Fiona. That was really insightful. I think now that we've seen the sort of evidence that we need to review, particularly in relation to sort of business risk. I'll turn to Axelle. I think it's fascinating. I'll turn to Axelle, who'll talk to us about the main features of the CSRD, the proposal, and I guess the main changes that we're seeing from the NFRD. I'll turn to Axelle.
Many thanks, Patrick, and thanks, Fiona, for sharing the result of CDSB's latest research on the implementation of the NFRD. I think it just rightly set the scene for me to explain and to do a bit of an EU policy update with obviously quite a big focus on the Corporate Sustainability Reporting Directive, or the CSRD, introduced last April. So just, going back to the basics, so the CSRD is actually reviewing the NFRD. The NFRD was firstly applied by company and reported against in 2018. So that means 3 reporting exercise. So as such, the CSRD aims to address a number of shortcomings, some of which were illustrated in our own research from the current regulatory framework, I think from both a user but also a preparer's perspective. Because the NFRD back then was seen as a good first attempt in the space of corporate reporting, but it's certainly not reflecting anymore the need for qualitative ESG information. And that's the case for, I think, 2 main reasons. The first one being obviously, and the current pandemic is probably another example of that, but we keep finding and seeing a need to increase action and speed to fight climate change and biodiversity loss, to name, one of the issues. Within also their financial implication for businesses that Fiona alluded to. But also, in the European context, a number of sustainable finance initiatives have been implemented after the launch of the NFRD, and that includes the EU taxonomy regulation that's part of a number of debates these days, and that also has a big reporting component. So against that background, the CSRD was presented last April, as you mentioned, Patrick, together with a number of other sustainable finance initiatives, including the first delegated acts on climate under the taxonomy regulation. So ultimately, once adopted, the CSRD will replace the NFRD. It's always hard to commit to actual deadlines, but we foresee an agreement on the CSRD next year in the course of 2022 for scheduled entry into force of the requirements in 2023. And that means the first reporting in 2024. So in terms of structure of the CSRD, it's amending a number of existing EU legislation, including the Accounting Directive, the Transparency Directive, and the Audit Regulation and Directive, as it covers a number of topics, including digitalization, supervision, and assurance of sustainability information. I think the proposal has received, a number of positive feedback from stakeholders who are asking for such review to be able to rely on and access qualitative ESG information. And I think from a policy perspective, good reporting is seen as a necessary foundation to make the European Green Deal and the sustainable finance agenda a success. And also, reorient these capital flows towards sustainable businesses. So you have already been seeing the slides there. That's with a table that aims to show, the significant changes introduced by the CSRD compared to the previous NFRD to, take reporting to the next level and really make it a strategic exercise with sustainability information on an equal footing with financial information, and hopefully as a result, increasing the quality and the usability of the ESG information. So in terms of these changes, the first one being the extension of the scope of companies covered by the directive. It will cover all large companies and all listed companies that include small and medium-sized enterprises. That also includes listed subsidiaries of non-EU companies. So you'll see the figures on the slide. There was around 12,000 undertakings covered by the non-financial reporting directive. Now we're talking based also on the draft from the European Commission, that's still not a final text. We're talking about 49,000 undertakings. So that's a significant increase. In terms of location of the information, it will have to be on a mandatory basis included in the management report. So the CSRD is actually removing the exemption that existed at national level for actually member states to allow the information to be reported on separately and later on compared to the financial information. So in terms of reporting requirements, as you can see from the slide, there's a number of new content categories. You had 5 in the NFRD. Well, now you have a number of them, including strategy, targets, on governance, the role of the board and the management, materiality determination, so the materiality assessment, transition plans, and further information on intangible. Also more requirements in terms of the quality of the reported information, in terms of it being qualitative and quantitative, forward-looking, as well as covering short, medium, and long term. And that some of that might sound familiar because most of it is coming from the TCFD recommendations that Fiona covered in her presentation, and show a lack of application to this date by European companies. And if you go to the next slide, yeah, more changes also summarized on that slide. So there's definitely an extended and more detailed coverage of ESG topics. So that should help also, companies to report on climate, but also water, and more importantly, also biodiversity, because I think the results from our research are fairly low when we consider, the importance of biodiversity and all the policy initiative under the European biodiversity strategy. So there's definitely more detail provided on that front in the CSRD, and that's also linked to big changes around standards that I'll cover in a minute. Additionally, the TCFD recommendations are formally embedded in the proposed directive. They were part of non-binding guidelines to the NFRD, and they are now really embedded within the CSRD itself. There's also a clarification of the double materiality definition, a mandatory reporting against EU reporting standards that are to be developed by EFRAG, so the European Financial Reporting Advisory Group, and ultimately part of delegated acts adopted by the European Commission. In terms of format of the information, it will have to be provided in a digitalized way following the introduction of the European Single Electronic Format for financial information. Assurance, that's certainly a topic that's going to be covered by Yen-pei just after me. The assurance of sustainability information will have to be done on a mandatory basis. Firstly, a limited, and then moving on to reasonable assurance. And I wanted also to mention that the CSRD clarified the supervision of sustainability information within the mandate of national competent authority. That's also a big part of to ensure that actually the quality of the reported information is in there. Just to moving on to the next slide. Yeah, I think you saw the number of changes and how the CSRD is going really one, even two or three steps further than the NFRD. So these changes are very significant for corporates in terms of the content and the format of that information that will have to be against a set of uniform standards, will have to be provided in a digitalized format. Also, I alluded to the fact that a number of new companies will have to report using the CSRD. And yeah, I can also mention the timeline that's also very ambitious, with requirements coming into play pretty quickly. And if you go to the next slide, and I think I won't have overtime there. I think it's important also to consider the CSRD within the broader and very busy EU policy landscape, because obviously it's not happening in a vacuum. So it's related to other legislation with reporting requirements, such as the EU taxonomy regulation that I mentioned a few times, the Sustainable Finance Disclosure Regulation for investors, the renewed Sustainable Finance Strategy, and the Fit for 55 package that were both released this month by the European Commission. And we also expect the much awaited Sustainable Corporate Governance Initiative that is now scheduled for end of October this year. So hopefully I provided a comprehensive overview of all these changes. Looking forward to the question, and handing back over the floor to you, Patrick.
Thanks, Axelle. And I think it's clear that there's a lot for corporates to get their head around, and there's a lot oncoming as well. So I'll turn to Yen-pei, just to get your views, Yen-pei, on I suppose the pros and cons, the current challenges corporates are facing in terms of the current regulatory regime, and what you see as the sort of benefits and difficulties that are coming from the CSRD.
Sure, thank you, Patrick. So yes, I'm going to be focusing quite a lot on reporting challenges and how the CSRD will or might not help to solve those reporting challenges. But before I launch into reporting, I did want to just mention that, you know, what we're talking about today, biodiversity, land use, water, climate, it's first and foremost, they're very tangible risks to businesses that businesses need to get to grips with urgently. So this is, I think, very much about setting up businesses so that they are in a position to preempt these risks and also seize the opportunities that can arise in doing so. So really a lot more than reporting. And for all of the reporting challenges I'm going to mention, you know, we are seeing a lot of people in European businesses, I think, thinking very seriously about these risks and how they're going to respond to them to be there for the long term. So let's just not lose sight as well of this bigger picture before I go into the nitty-gritty of the proposed legislation and standards. So in terms of current reporting challenges, I very much agree with what Fiona had touched upon, and I just pull out sort of three main areas of challenges that I see, particularly in our review of integrated reports being produced by European companies. So first of all, I touch on conciseness as a challenge. Linkage to strategy is another challenge, and connectivity as well. So in terms of conciseness, we've been reviewing European annual integrated reports over the last 5 years, and as NFRD has got implemented, we've certainly seen a number of those reports getting significantly longer, some now running over, just the management commentary running over 200 pages. And on the other side, we see some companies trying to deal with this conciseness challenge by publishing separate reports from the annual report. But the risk with that is sometimes information that might be, you know, financially material, or at the very least affect a sort of company's ability to create value, being missed out from the annual report. So in this, I think definitely very helpful that the CSRD now requires non-financial information to be reported in the management commentary, and that will help, I think, with the connection with the financial information in the financial statements. In terms of conciseness, with very long reports, it's always really difficult to find relevant information in the middle of dense narrative. So hopefully digital reporting will also help in locating information that different users need. But I just need to emphasize that context will still be really important. So we must not also lose sight of the importance of having sort of narrative around the numbers as well. And in terms of solving the conciseness challenge, I'm less sure the CSRD in itself will solve the conciseness problem, just because of the massive list of different sustainability topics that, as Axelle mentioned, companies will need to be reporting on. And moving on to strategic focus, often we see non-financial information being presented without linkage to the company's specific circumstances or strategy. So very often we have impact measures, but as Fiona mentioned, it's the businesses' resilience to things like climate change. That's still the missing piece of the puzzle. So without this linkage to strategy running right the way through the management report, often you get the feeling that non-financial information is disjointed, and sometimes you come across a metric or the company talks about an initiative and you're like, why are you telling me this here? In this sense, I think it's a very good development that the NFRD now makes specific reference to companies talking not just about their business model, but about their strategy as part of the requirements. Also, it's good to see intangibles now feature in the CSRD, and notably the different, actually integrated reporting capitals, sort of highlighting the interconnected nature of resources and relationships that come to any business leader needs to be thinking about these days. It's not so helpful that the intangibles do seem to be kind of sitting in a separate bucket from the E, the S, and the G disclosures in the CSRD. So I think in trying to apply these requirements, we do just need to sort of look beyond the way the CSRD is presented and really try to show an interconnected picture. So that leads me to the next challenge, which is connectivity. Very often, connectivity is still incomplete. If I can refer to the integrated reporting framework, again, it highlights that we need many different dimensions of connectivity. So we need definitely connectivity between sustainability information and, as I said, the flow of the management report. We need connectivity between financial information and non-financial information, also, as we've already touched upon. But also, just as important is connectivity between, say, priorities and commitments over different time horizons. Connectivity in the way companies are managing their key resources. So, for example, key to a company's climate strategy might be investment in R&D, in green technologies, for example. So that linkage very much between the intangibles and the E part of the CSRD. And then finally, all of these issues are interconnected. So as we're thinking about addressing climate change, that's very much also linked to addressing water use, addressing biodiversity. So thinking about these topics in themselves in an interconnected way. So it's really good to see EFRAG is highlighting connectivity, particularly connectivity between financial and non-financial information, as one of their key conceptual guidelines to developing the EU sustainability reporting standards. That's definitely positive. But I think in implementing this, we need to sort of achieve a kind of mindset change. Really, we need to get business leaders to think in a more truly integrated way. So again, it's about looking beyond the text of the CSRD and applying that really to your business. I've sort of linked up NFRD and CSRD. One other thing that I might mention for probably the sort of listeners coming from outside of the European Union, those working for multinational groups, you might be interested to hear that the CSRD specifically touches upon the concept of equivalence. So if you are a subsidiary of a parent company outside of the EU, you might be exempt from having to comply with the CSRD requirements if your parent is complying with rules that are considered equivalent. So the big question is here, how this equivalence is going to be assessed. Axelle had on her last slide that the IFRS Foundation is setting up an international standard setting board for sustainability reporting. And this is very much happening in parallel with the CSRD developments. So the question is, when this international standard setting board comes up with their standards, are people following those standards going to be considered equivalent? So very much hope so. We've already seen the challenges that happened in accounting when the US decided to diverge away from IFRS, and many groups ended up having to report on 2 sets of accounting standards, and that's just not helpful. So very much hope that the EU will work closely with the IFRS Foundation to make sure that the standards are at the very least conceptually consistent. And I might highlight that materiality might be one area where there could be a conceptual divergence already. But we've already got the US already thinking also whether they should be setting their own sustainability reporting standards. So what we really don't want is to have sort of one set of rules in the US, one set of rules in the EU, another set of rules in Japan, say. Ideally, we think there should really be a multilateral mechanism so that policymakers around the world get together to have one set of consistent sort of reporting requirements across the world for those multinational companies. And with my tax hat on, we do have the Model Tax Convention, tax being, of course, something that is very much a matter for national sovereignty, but as we know, income and capital flows across borders. Just as many of these sustainability issues very much directed by jurisdictional public policy priorities, but environmental impacts obviously flows across borders. So I would, my dream would be that we have one day soon a model sustainability reporting convention. So going on to sort of putting this in the context of other things that accountants need to be thinking about. Axelle talked about how the EU is really adopting a sort of a cross policy areas approach in the Green Deal. There's a EU Sustainability Corporate Governance Directive and the EU Taxonomy. In tax as well, it's worth mentioning that energy taxation is very much part of the Green Deal, and we are now looking at proposed legislation that would put in a minimum tax rate on fossil fuels based on their energy content, for example, and phasing out subsidies, exemptions for fuels used in the aviation industry. So again, when we're thinking about connecting financial and non-financial, this is sort of going to make it happen in a very concrete way. I'm sorry I'm already going a little bit over time, but I did just want to sort of conclude with the suggestion that, especially if you are listening to this and you are not currently under the NFRD scope, then you really can't wait for the detail to be rubber stamped to get prepared for this. So very much recommend that you start thinking about how your business's strategy interacts with the E, the S, and the G topics that are coming up in the CSRD. And that ranges from climate change, water use, biodiversity, to also equal opportunities, working conditions, and human rights. All of these areas, it may seem overwhelming, but really start from the basics. Go back to think about what is my company's purpose, and by going back to the basics, thinking about essentially your business's sort of contract with society, that will help you hopefully to prioritize the resources and the relationships that really matter. Thank you very much.
Thanks, Yen-pei. That was really useful and a really good note to jump off into a sort of Q&A section. And I've seen some really great questions in our Q&A. So I'll just initially, there's been a few questions around the scope of CSRD in terms of which companies sit within this. Is it large companies sit within the CSRD, the smaller family companies sit within it. And I know we've covered that, but Axelle, if you could talk a little bit about that. And then beyond that, I suppose there's a lot of companies that will be thinking, as you point out, Yen-pei, well, obviously I'm going to sit within this CSRD, this new scope, and what should I be doing? And I guess what are the benefits for those companies to be thinking about that beyond simply that they'll need to? What are the key positives that they'll be getting from reporting under the CSRD? And that's the sort of question for everyone, but I'll pass on to Axelle quickly.
Thank you, Patrick. Yeah, obviously lots of questions around which company will be covered. So I think all large it's all large companies and all listed companies that are covered. From my understanding, it's also public interest entities at the European Union level, so that makes also maybe make some differences with some companies that are considered public interest entities within a special member states. I think what's important also to consider is that some member states might actually, it's a directive, so that means it has to be transposed into national legislations. And that means, you know, for instance, I know France has included some private companies under specific legal status in the transposition of the non-financial directive. So I think some of the details might also rely on the transposition. On the other question on family companies, you know, I'm not so sure about the answer there. I guess it depends. I don't know if Yen-pei, Fiona, you have anything to add on. I guess it depends of the legal status of the company.
Yes, I suppose if you are a small listed company, then you might then you would be in scope. I think there are currently, correct me if I'm wrong, no mandatory requirements for non-listed small companies. But sort of, this is not to say that smaller companies won't get bigger suppliers and customers demanding that information from them potentially one day. So, and also just to sort of be future-proof, they might also start to think about some of the areas covered.
Maybe I can just add information there that there is a sense within that increased scope, there's a sense of proportionality within the proposal. It might be also subjected to, you know, further discussion, but listed and small and medium-sized enterprises are granted within the proposal a 3-year delay in the implementation of the reporting requirements. I think we didn't mention that, and that's important. And secondly, there are specific SME reporting standards, because, you know, companies will have to report against a set of uniform standards, and the Commission is going to adopt also a specific delegated act for SME reporting standards. So I think this is also important to take into account while, you know, as a company looking, oh, am I going to be covered, and what sort of requirements and standards will have to apply.
Thanks, Axelle. I think that answers the question. So I've just got another question for Yen-pei. You touched on this a little bit on how concise we want to keep reports, and the fact that, you know, the value of reports is mitigated if they are far too long and far too hard to find the correct information. And I suppose that's the added value of having the information reported in the management report. But I suppose, how do we, and you have spoken about this, but I'd love to hear some more. How do we make sure that we don't end up with excessively long and getting longer and longer reports that we currently are seeing?
Yeah, so I suppose some level of prioritization would be needed, and so as I said, start from the company's purpose, and that will sort of give you hopefully an initial list of the topics, the key resources and value drivers that you should be thinking about. as you follow that through, I would suggest then go to your business model and go sort of what are the value drivers that are really impacting my business, and do the same with strategy, just to test that you have all of these areas covered in a consistent way from all different dimensions of your business, and then that will help you to report in a very consistent and coherent way on your sort of key resources, and on those, and what you're doing, and put what you're doing in those sustainability topics into that strategic context. Outside of that, I think there will be information that you might not consider would necessarily have direct impact on the business as it is today, but you will still need to report on it, and then it would be helpful perhaps to include that information in an annex, in summary, rather than in the body of the the management report.
Thank you. And so while we're on, I guess, the report itself, we've had a question in, will the CSRD require the disclosure of mandatory KPIs to ESG topics? And do you think mandatory KPIs to ESG topics are a good idea, or is that an oversimplification of a complex topic?
Should I go, or should I let Axelle and Fiona go first?
You go ahead, Yen-pei.
Okay, that's a very interesting question, and one thing that I suppose many of us have already touched upon is materiality, and this double materiality concept that is so core to the CSRD, and basically saying you need to be considering the materiality of matters based on their impact on your business, but also you need to be considering any material impacts of your business on people and planet. And EFRAG has come up with a sort of rather more developed definition of what this impact on people and planet might look like. But to be honest, there is an extent to which specific KPIs would be really, really helpful, because that double applying that impact materiality, and going to what EFRAG was describing with about public policy priorities, considering planetary boundaries, these are extremely complex judgments for companies to make. So we would definitely very much hope that EFRAG will be coming up with a specific enough list of KPIs, and a list that is sort of targeted so that again, to avoid that information overload.
Yeah, just building on that, to answer specifically to the question, I think there's also, because basically the European Commission has come up with the proposal. Now it's up for debates between the European Parliament and member states to sort of agree on a final version of the CSRD. And in parallel, EFRAG that we have mentioned is also very much starting the work on the European standard setting side, and this is also at that level that some suggestion and proposals will be made. But maybe from a KPI perspective, it depends also of the different ESG topics, because we've seen in our analysis that a lot of companies are not always disclosing their scope 3 emissions. I think the CSRD has also the intention for companies to report on their supply chain as well. So this I guess to an extent this remains to be seen, because also the CSRD in itself is more of that big list of what should be included in the sustainability information, with the risk around conciseness and that we have just discussed before. So this also remains to be seen. But I understand the question also because in some other legislation, for instance the SFDR that has been much discussed, there is this approach of having this set of mandatory indicators. So, but I mean, I think this one will be also part of the discussion. But the idea is also for the disclosure to be a bit also business specific, rather than also having just a very fixed lists of indicators, KPI that company will have to report on.
Yes, definitely. And if you, by the way, we're thinking about FRAG, what FRAG might do in setting standards. If you look at our sort of international financial reporting standards, they are principles based, but they actually go into quite a lot of detail as to what companies should do, both on KPIs and on both on numbers and other disclosures. So if you take financial instruments, for example, the standard very clearly says what financial instruments are, what criteria you should apply to know what kind of financial instruments you have, when you should put financial instruments on your balance sheet, how you measure them. And so the judgment that companies apply outside of that is really quite limited, and mostly in terms of presentation and disclosure, rather than do I put this in the report. So it would be really helpful if we have that kind of detail, from FRAG.
Thank you. That's really great. We've had a question come in that I think is quite interesting on third-party verification. Are there any good practice? Is there any good practice in terms of third-party audits for ESG disclosures? And I guess this touches on the sort of capacity companies have to meet these requirements, and what I suppose help they've got in terms of getting this right. And that's a question to everyone.
If third-party verification is about, are we talking about external assurance, I suppose?
Exactly,
in this case. Yeah, so the CSRD does now require mandatory limited assurance on the information reported. And we think that would be really helpful. It's not the end game, but that would be a very helpful first step, because you have the financial statements that have reasonable assurance. So having a big gap in the kind of external assurance you get in the front half and the back half of your annual report is not helpful. We do think that eventually it would be good if we could also get sustainability information on a par completely with financial statements, so on the level of reasonable assurance. But it's just the audit community still needs time for practice to mature in this area, and until then I think it's a sort of cost and benefit judgment for companies to decide what level is appropriate. But certainly, I would say aim for the highest level of assurance that you can.
If I can just come in, just to state where we're coming from under the current NFRD, where assurance of sustainability information is not mandatory. There's only 3 member states in the European Union that have actually required sort of, transposed further the NFRD. So that's France, Spain, and Italy. So that's going to be, a significant change. And also, let me just answer quickly one of the questions around assurance as well that I saw in the Q&A box. There was a question about, whether reasonable assurance is just a matter of time or an option. Yeah, just to be clear, my understanding is that it's not crystal clear in the proposal, and there's languages around being an option, at least within the short term, a 3-year period being limited. And Yen-pei come in if I'm saying something wrong there, but it seems from the proposal that this is the sense of history in a way, and that we might expect to move towards reasonable assurance. But the person that asked the question is very right, and thank you for raising it, just to make sure we are on the spot on this topic.
Sure, and just if I could add, I guess, on the good practice side, I think, as we've pointed out, obviously it hasn't been mandatory under any initiative previously for verification to happen, but actually, a lot of at least larger companies and mature reporters have for a number of years obviously recognized the benefits of gaining assurance or verification. So whilst, as we said, I think it would be great to bring up bring up that baseline by making that a universal requirement. If you look to some of the larger organizations, many will typically assure a selection of their non-financial KPIs currently. Obviously, the challenges there being that, perhaps it will be selective as to which measures are assured. You could choose to drop something out of assurance scope, etc., if you're a bit iffy on it in a given year, etc. So I think that there's certainly a maturity that, as you mentioned, Yen-pei, will hopefully start to come through. But actually, many large organizations have already seen that actually not just in terms of stakeholder demand for assurance, but actually it can offer a lot of benefit to them as an organization as well in terms of the feedback that they'll get from that process to help them mature their reporting too.
Thanks, Fiona. And we've had some questions in terms of connectivity for the CSRD and other regulations. I mean, I've got a question about the interconnections between CSRD and the taxonomy regulation, particularly whether corporates can create sort of synergies as they're preparing their sustainability reporting and their taxonomy reporting. I suppose that's a question for Yen-pei.
I'll sort of answer on a very high level, and then Axelle, do feel free to come in. Now, the sustainable finance proposals, I think precede the CSRD, and it's coming into effect even before the CSRD. But what's really helpful is that they've looked at aligning the information demands on sort of in terms of the two sets of proposals. So yes, companies currently spend a lot of time responding to different information demands from different investors and rating agencies, hopefully by aligning the two legislations, that will help to achieve synergies and make things easier from that point of view.
Yes, if I can jump in, as I already alluded to the taxonomy regulation many times in my introductory remarks. Well, certainly, if you look at the CSRD itself, there are strong connections there, because basically the scope of companies covered by the NFRD and then the CSRD is actually the same as the one for the EU taxonomy. So any company that has to apply the NFRD has also to report the three famous KPIs under the EU taxonomy. Also, environmental matters under the CSRD are actually based on the environmental objective of the taxonomy. And also the taxonomy related information will have to be subject actually to the same requirements than the sustainability information, including in terms of assurance. But as Yen-pei rightly mentioned, the taxonomy reporting requirements are coming a bit faster on companies because they come into force as of next January 2022 for the first two climate-related objectives of the taxonomy. But it's important to say the rules have been recently published in the shape of a delegated act under the Article 8, which is the reporting article under the taxonomy. The reporting requirements are phased in, meaning that for the first year, companies are expected to disclose eligibility. So the share of their economic activities that are eligible, that means for which there is technical screening criteria within the current taxonomy. That's very much, an evolving tool. And then they'll have to report on really the alignment. So really, applying the different criteria and report these KPIs on, percentage of turnover, CapEx and OpEx aligned with the taxonomy the following year. But this is very much, so yeah, it's true that for companies, this is each year brings a number of additional requirements, but hopefully in the near future there are definitely synergies that can be found, because yeah, the taxonomy is a part of the sustainability information that company will disclose going forward.
Thanks, Axelle. I mean, I think that brings me on, and I'll make this my last question, but I think it's interesting to think about in terms of the sort of the new regulations that are coming in all the time, and the timing of the CSRD, entering into force in 2023. What are our thoughts on that? Is that too long, or should it be coming in earlier, or what do we think about the timings?
So that timing is extremely ambitious, especially as Axelle has already touched upon. CSRD is only the legislative instrument, and we are relying on the standards which are yet to come out. So that leaves, based on what we hear from our members, the amount of time and resources needed to respond to the NFRD, this will definitely be a challenge. What we're saying to the European Commission, by the way, is we're suggesting for those companies not currently within scope of the NFRD that you leave them a potentially 1 year delay to learn from the experiences of those companies that are sort of in a better position already to comply.
Yeah, and maybe I would just add as well, I think a point you mentioned earlier, Yen-pei, about actually not waiting for that deadline, in the sense of particularly for organizations who perhaps already have disclosure under the NFRD, you can be looking at those new requirements and almost using the next couple of disclosure cycles, to practice and iterate those new disclosure requirements. And I think one thing I just mentioned as well that you said earlier is that, these risks are evident now for businesses. So actually there's no time to waste in terms of getting to grip and understanding both the risks that businesses will face from environmental matters, but clearly, what is also your contribution going to be to these urgent global ambitions. So I think there's the challenge of, I think, leaving that space for the disclosure to evolve, and that's understandable, but also recognizing the imminence and urgency of the issues too. So even if it's about the process of just getting to understand that internally, getting the right people around the table and understanding those issues before you report, I think certainly no time to waste in getting started.
I think just maybe a final comment from my side. If there is, for any reason, from really a policy perspective, if there's some kind of delay actually that happens, and that has happened, on other DSFDR that I mentioned before, we've seen, for instance, on the taxonomy reporting requirement, that there's also further time for financial market participants also covered to report against the taxonomy, also to get some information from their investee companies. So, what I would say to corporate is, if you do get some kind of extra time for some reason to apply it, then it's probably good news. But yeah, I would definitely start and be ready for that initial date. Also, because the CSRD, as we said previously, is just some kind of a big framework, and then all the standards work will come, and it might come quite close also to the date of application, because for the standards, we're looking at October 2022 for the first set of standards, which will be generic, and then the sector-specific standards will come in October 2023. So although you have a bit of sort of delay to apply the standards part, all of that is sort of an ongoing exercise where, no company should have to, and no company starting from scratch, but every requirement is going to be building and piling up in the upcoming years. I think. I hope I'm not ending on a too difficult note, but yeah, just I think get ready now, and yeah, and your reporting will just improve going forward and be even better than what it is.
No, I think sorry, Yen-pei, go ahead.
Sorry, also just to add final point, I mean, for companies outside of the EU as well, we've heard about the EU taxonomy. So if you have any kind of investment from European firms, it's sort of worth starting to think about this as well. And international standards are also coming down the line too. Great.
Thank you. I mean, I think that's a good note to end on. Everyone should be acting now, getting started, and perfecting what is a very difficult endeavor. Just as a final note, any of the resources that we mentioned here are available. The sort of research documents we mentioned at the start from Fiona are available at cdsb.net. We have a support services, as exhibited in the slide there. We have a support services function at CDSB. So if you're a company looking for one-to-one consultation on these matters, do get in touch. And we also have a newsletter that you can sign up to on our website. So I will sign off there, and I'll say thanks very much to our esteemed speakers who I think covered a very complex topic very eloquently. So thank you very much, and join us next time.
Thank you
Thank you,
very
everyone.
much.
Bye-bye.